Let's go. Welcome to this webinar, where we give you a deep dive on Tax Pillar 2 and also show you the solution we developed in OneStream. Now, my name is Martijn van Bommel. I'm responsible for the global sales with AMCO Solutions and apparently also your host of this webinar today. Pillar 2 is one of the hot topics for the larger companies, which is already applicable for 2024. In this webinar, we will explain what the impacts are for you and how you can address this, the consequences of this impact in OneStream. A lot to do in 2024, where an end-to-end solution will help you in the challenges ahead. Also, we will provide you with some tips on how to approach this journey in your company. During this webinar, you can put your questions in the Q&A box at the bottom of your screen, and if time allows, we will answer these questions at the end of the webinar. If there's no time left, we will follow up on these questions after the webinar, of course. So let me now introduce you to our speakers of today, Tim van Uden from ATC and Peter Fedotov from AMCO Solutions. I hand over to Tim to introduce himself.
Good morning. My name is Tim van Uden. I'm a partner of finance and tax technology at Advanced Tax Compliance. My daily work consists of supporting multinationals with their strategy around process restructuring in combination with the right technology. And next to my role at ATC, I'm a co-founder of Smarter Consulting, which focuses on the application of virtual employees and combine that with artificial intelligence and machine learning. And finally, I'm a lecturer at the Tilburg University, as well as the Dutch tax authorities, where I focus on teaching the next generation on tax and technology and how to use that in practice. And today with me is Peter Fedotov.
Yeah, good morning. Welcome, everybody. My name is Peter Fedotov, and I'm a principal consultant at AMCO Solutions and a certified OneStream architect. My work is focused on helping clients achieve their goals in the world of enterprise and corporate performance management through the use of the OneStream platform. Whether that is financial consolidation or planning, tax, or ESG reporting. At AMCO, I lead a team of very talented individuals, and together with my colleagues, we develop and implement a variety of solutions. Back to you.
Thank you guys for being here. AMCO Solutions and ATC joined forces to develop the Tax Pillar 2 solution in OneStream, making sure both content and technology are covered for OneStream customers. AMCO is a OneStream Diamond partner, and since the beginning of the year, we can also call ourselves a OneStream development partner. OneStream enables partners to develop software on top of their software, which means partners are also able to bring solutions to customers, like we did with lease accounting in the past, and we also try to do that, of course, with our tax solution. AMCO did over 220 OneStream projects with 120 OneStream customers. We cover the whole application lifecycle of OneStream. That is from advisory to implementation, training, and support. Now, with our 200 plus employees active in 11 regions, we're able to cover the areas our customers are in as well. Let me hand over to Tim to introduce ATC.
Yes, thank you, Martijn. Advanced Tax Compliance is an independent company that can be divided into 4 divisions. From the start in 2007, our tax department is the core of our company, and the team puts the focus on assisting M&E clients with their daily tax practices. And basically, you can think of preparing CIT returns, supporting with the various tax reporting clauses, supporting as interim tax managers, as well as executing vendor selections and providing content to tax-related software solutions. Next to the tax knowledge division, we have 2 more divisions fully focused on automation. Our tax and finance automation department helps our customers with their first and next steps in automation. Our focus is on the full finance and tax integration, and by combining the short-term as well as the long-term challenges of our customers with the right platform, the right solution, as well as the right process, we work towards a future-proof tax and finance function. And finally, there's our Smarter division, which helps any company, any department, any team with the automation of their repetitive, error-prone, and time-consuming processes. And this helps with regaining time to actually perform actions and perform work and giving back energy to the business instead of taking energy. And a large part of the activities of Smarter are focused on healthcare. These divisions combined allow ATC to provide the end-to-end knowledge, process, and automation for finance and tax department.
Okay, AMCO solution and ATC teamed up to deliver to the tax reporting solution in OneStream, ensuring that our customers benefit from a blend of both technical innovation and substantive content. We combine a OneStream Diamond partner with the right tax frameworks and the right approach. So ATC already proved their framework with many other large companies, and we are now bringing this into OneStream as well to benefit from our OneStream customers. Together, we can take you on this journey implementing Pillar 2. Tim, can you please introduce Pillar 2 to us?
Of course. As the title of the webinar states, we're going to focus on Pillar 2, and also known as global minimum tax. And currently it's a hot topic in every conversation that we have with companies these days. Although Pillar 2 is a hot topic now, for us, tax reporting has always been an important topic for the tax department. Pillar 2 is the confirmation that we are shifting more and more from focus on CIT compliance to calculating the tax positions during the year. For those who are not familiar with Pillar 2, it concerns a global minimum tax directive under the OECD agreement on the reform of the international tax system. A lot of words, but its goal is to avoid tax erosion and profit shifting globally. And to understand where you are currently in this process, we've put together a poll question for you to complete. So please answer the poll appearing on your screen.
So the answers are dropping in. Just a minute. I will share that with you. I'll end the poll and I will share the results. There you go. So 51% is saying yes, alignment between finance and tax is there. 42% initial discussions are starting up, and 8% no, should we? So that gives already an indication, Tim, that they're considering the Pillar 2 regulation already and to act on it.
Yeah, especially it's good to see that there's alignment between finance and tax, and we'll touch upon that later in this webinar. But that's a really important aspect. Before we move into the demo part, let's recap a little on the background and the variables of Pillar 2. So as mentioned, Pillar 2 is a tax system that will apply with uniform effect worldwide, and it is designed to ensure that multinational enterprises pay a minimum tax of 50% on the local income tax, income arising in each jurisdiction where they operate. To keep it straightforward and also without all the side steps, because there are a lot of side steps, country-specific deviations and differences in interpretation, it basically concerns company with a consolidated group revenue of above 750 million euros. The impacted MNEs must pay a minimum effective tax rate of 50% in every country they operate, if that country has agreed with BEPS Pillar 2. Where the effective tax rate is below the agreed minimum, this new system will top up the tax liability so that the overall tax rate will reach the established minimum in each jurisdiction where the taxpayer is resident. The OECD estimates that over 8,000 MNEs will be impacted by the Pillar 2 directive. Furthermore, the OECD estimates that there will be an increase of 9% in average corporate tax revenue. Fortunately, more in-depth studies show that it's more likely to be between 2 and 4% increase. For example, in Germany, the estimation is that it will increase revenue with approximately 2 billion euros, which is an increase of approximately between the, let's say, 2.8 and 3.2%. So there are different investigations going on, and it really has to turn out when it's executed what the actual results will be. But for now, a lot of enterprises will be affected. Well, Pillar 2 presents new operational complexities for corporations to meet the presented requirements. So let's take a look at the complexity of Pillar 2 when we translate that into the company processes. And let's start with the financial statement disclosures. So multinational enterprises must specify the jurisdictions carrying potential exposure to top-up tax within their financial statements. This entails undertaking calculations to assess the necessity of top-up taxes, determining the corresponding amounts, and incorporating these into their current financial closing procedures. And then there are the country-specific deviations. So various countries will adopt distinct strategies for BEPS Pillar 2. It will be adopted on a country-by-country level, and numerous companies are hesitant to initiate the adoption process. And yeah, this makes sense because due to the concerns about potential future changes. Pillar 2 is still quite fluid when it comes to, let's say, the next steps in the future. Considering this, a flexible approach to tax reporting is essential in this context. On material impact, if top-up taxes come into play, companies will need to either pay more to regulators or reassess their global structures, value chains, and activity locations to minimize potential consequences. And this could lead to a notable impact on taxes, raising cash tax costs and decreasing earnings per share. Next to this impact, a really important part, and it's also a really important part of this webinar, an important challenge is around data management and technology. Pillar 2 involves collecting over 100 pieces of information per entity. So covering accounting, tax, and company details. And this includes things like accounting data based on group standards, tax reporting data following group standards, general company information like names, tax IDs, jurisdictions, activities, ownership details, and also employee numbers. To gather all this information, you need to understand the definitions within your group. You have to know where your data is stored, how to access it, and how to address any missing information. Finally, it might require a change in the applied technology. So important to understand is that regular ERP systems may struggle to handle the complexities of BEPS Pillar 2. So for multinational enterprises, it's important to carefully think about their global tax setup. Multinational enterprises should thoughtfully evaluate their global technology infrastructure. And of course, an obvious suggestion could be to adopt a corporate performance management solution, such as OneStream, capable of overseeing all affected processes throughout the enterprise, including consolidation, the close, and provisioning aspects of BEPS Pillar 2. Although there are quite some challenges, and despite the demands of Pillar 2, it provides an opportunity to enhance data accuracy, automate reporting, and potentially improve your tax positions and planning. But of course, this can be done solely by tax or solely by finance. An important factor to get this done is to create some love between finance and tax, where tax and finance are, well, at least from a historical perspective, operating as separate streams or silos, if you will. Tackling these new challenges will be less complex when the two departments work together and share knowledge and data. Now we have a clear view on the conditions and the complexity and the urgency of working together, as pointed out. It's important to provide you with some guidance on timelines to establish this relationship. When will these rules come into effect? So although 142 countries have agreed to the framework, Pillar 2 will come into effect on a country-by-country basis. The minimum tax directive was officially adopted by EU member states on December 15, 2022, and they are required to incorporate the directive into their national laws by December 31st, 2023. The OECD has proposed that the Pillar 2 rules take effect in 2024, except for the under-taxed profit rule, which is suggested to come into force in 2025. So potential implications include a couple of things. Financial statement disclosure in consolidated and local financial statements are already applicable in this year, so in 2023. And the first impact on the quarterly tax provision calculations will be as early as Q1 of 2024, where you use local country calculation templates. And the first global information return will be applicable as early as June 2026 and be followed by other filings, QDMTT, and other supplemental returns, and they follow fast after this date. So now you know what the deadlines are on the horizon. We would like to know whether you have started the preparation or not. So we created another poll question for you to answer.
So the poll question is about which phase you are in at the moment for pillar 2. So the gap analysis, the first calculations, implemented but not a stable solution yet, or an end-to-end solution with an analytics already. So we'll wait a few seconds to get the results in. Okay. Thank you for your answers. And here's the end result. So Tim, 55% are doing their gap analysis at the moment. 31% already having first calculations done. 10% implemented, but not a stable solution yet. And the last one, 4%, not yet an end-to-end solution. We see that in the market a lot. Huh?
Yes, definitely. And that's also why we have this webinar, of course. Okay, thanks for answering the questions. Now we have set the stage on the conditions, the complexities, and the accompanying timeline. Let's talk a little bit more about the objectives and first things to do. Based on the challenges we mentioned and the conversations we have with various tax authorities, M&Es, as well as experts on the technology side, there are 2 practical stages or objectives, if you might know, currently identified. And in this case, let's start the other way around. First start with the second objective, which is more focused on the longer term adaptation of these regulations. So important to understand is that first of all, every country might require a different way of filing. So the goal is to submit an information return centrally to one tax authority of typically the parent or intermediate parent country and share it with the other tax authorities. This process will involve using an XML format for efficient exchange and the necessity of having appropriate competent authority exchange agreements between countries. Based on the lessons learned from implementing CBC reporting, it's crucial to finalize these exchange agreements early, either on a multilateral or bilateral base. This helps avoid local filing obligations and last-minute changes to compliance processes. So we see that there's a big challenge to encounter as well. And secondly, advisory is really required on the output and therefore also the input data. So there are quite a lot of data points that might have a different meaning or purpose in specific jurisdictions. And once you have all that information gathered and compiled into something usable, it still does not say anything about the implications. Therefore, it's important to either have someone internally or an external advisor dedicated to analyze the information to determine the implications for your organization and how to incorporate this within your daily processes and future structuring. And be aware that tax will be present in your financial close, quarterly statements, and on your annual report. But what's important now? What's considered to be also to us, the biggest challenge according to clients and the tax authorities, that's related to objective 1, telling the story of your data. So how did you gather the information spread around your organization and compile it into something that you have filed? How is that information supported by controls, documentation, and the proper evaluation? So telling this story confidently, that's quite a challenge. And we see that a lot of companies come back to us saying, yeah, we know the theoretical approach, but how do we practically approach this? So it all relates to gathering of multidisciplinary data. The biggest challenge is around aligning the different teams and divisions within your company. And this is not solely a tax challenge, as it relies on data from finance, legal, HR, and so on. So it can be quite challenging to get people to acknowledge the urgency of the matter, and therefore starting early with connecting these departments can really help you along the way. Furthermore, you need to gather over 250 data points, build up out of more data points. And the challenge is also mentioned in previous slides, and it can't just be solved by technical knowledge alone. It requires data identification, It requires decentralized data gathering in a structured and controlled way. And on top of that, this information needs to be built up into reports and can actually be analyzed and converted into various output reports and returns. So local organizations must collect information and provide it centrally to perform a form of consolidation. And what do you think of the situation when you have filed, for example, an information return and questions from the authorities arise? When your data gathering process is not a controlled, automated way of working, it is very difficult to go down the path and try to reconcile how you got to the information that you've provided. Issues might arise like, what was the underlying system? What FX rates were used? Who was responsible for the information? And what offline calculations have been performed by the local data providers? These are all challenges that you face when this process is not in control. Considering this, the need for tax technology is quite obvious. It will support your story on how you got from gap analysis, entity-specific calculations, the roll-up to jurisdictional level, and all the way up to the analysis on the information and the filing of various returns. So let's move over to the fun stuff. How do we think that you can deal with this? In line with objective 1, like telling the data story and all the complexity around it, we've created our global tax solution, containing solutions around global tax reporting, Pillar 2, and CBC reporting. Important to understand is that we're not talking about accelerators or starting kits, but end-to-end solutions that have proven their use on various platforms for quite a lot of multinationals. We leverage source data, allow you to enrich that with manual data and combine it into one version of the truth for various processes. Furthermore, our integrated Pillar 2 solution is connected to the global tax reporting solution, as companies need to integrate the Pillar 2 rules into their accounting processes. For example, assessment of the effective tax rate of entities in different jurisdictions and determining whether income should be included in the tax base. Furthermore, the changes introduced by Pillar 2 may impact deferred tax positions through adjustments resulting from the global minimum tax and other provisions. During the demo, we will put the focus on Pillar 2 data gathering and structuring. And for more information and in-depth demo on the tax reporting solution, we would like to advise you to stay tuned to our newsfeed, as we will announce dates for that webinar as well. Some guidance on the demo that we're going to perform. We will show you how the data story translates into within OneStream, and we will show you our global tax solution containing our end-to-end solutions. From there, we do a deep dive into Pillar 2 in the following order. So we first touch upon the gap analysis. This will help you with the initial analysis and validation within your organization. It contains all relevant data points for the future calculation for Pillar 2, as well as all the supporting information and documentation to support that data story. And from there, we're moving into the process of gathering the information at entity level, executing preliminary calculations, and provide a first glance on the Pillar 2 issues. The entity information rolls up into a jurisdictional overview with the option to allocate the top-up tax between the relevant entities. And finally, we move up towards the group report, where we can show the global overview and the top-up tax for the group. The whole process is supported by all the native functionalities of the OneStream platform, and Petra is going to talk about that in a minute, combined with an in-depth guidance on the tax technical elements. So let's get into the demo. Welcome to our global tax solution, the connected tax environment covering global tax reporting, Pillar 2 and CBC reporting. Furthermore, this hub will be expanded in the future with all kinds of tax-related solutions. Important to understand is that, again, we're not talking about accelerators, we're talking about end-to-end proven solutions. And before moving into the demo of Pillar 2, Petra is going to tell a bit more about the technical setup of the environment. So go ahead, Petra.
Yes, thank you, Tim. This tax solution was developed with the use of standard OneStream functionality and components and is based on OneStream metadata and dimensionality. It is important to outline that the tool is configured in such a way that tax-related data is stored in a separate cube so that the clients already using OneStream for financial consolidation or something else do not need to worry about that setup or data being affected. This ensures a clear separation between financial and tax data and enables a straightforward split in security setup and data access. Having said that, the solution does support copying of data from the finance setup within OneStream to the tax queue to be used at the starting point of data gathering. Data points from the financial model are mapped to the tax model via inbuilt mapping tables. This tax solution does reuse the client's entity structure in OneStream if available, but these entities are grouped into an alternative hierarchy to roll up into the corresponding jurisdictional level. The rest of the dimensional setup is specific to the tool. We do utilize workflows and dashboards to guide the data gathering process and member formulas in combination with business rules to support the calculation engine behind the solution. Parts of the setup are flexible to ensure that it can be tailored to a client's needs. This is in general how our solution is set up and how it works. It is important to outline that our solution is being constantly revised based on projects and client demand. Back to you, Tim.
Thank you, Petter. So let's go back to the solutions. From this dashboard, we can navigate to the various solutions. And as mentioned, we're going to focus today on the Pillar 2 solution. So when we select the Pillar 2 solution, the interface opens up and there are a couple of things that you might notice. On the left-hand side, you see the hierarchy setup of the demo, a company divided into various jurisdictions. We reuse the entities of the company already present, but as Petter mentioned, are able to set this up with an alternative hierarchy in the system. Furthermore, you can see that we can select the year and we can select the scenario and we can execute any of these templates through the Go button. If we look at the overview slide, I'm going to go back to the slides that we have. We are first going to move into the gap analysis. For this company, we've set it up on the top level. So the gap analysis can be set up per jurisdiction or for the total group. And it depends on your organization and whether you have one central system or deviations per jurisdiction or perhaps even per entity. So it really depends on your preference where you set this up. So let's go into the gap analysis. What you see here is the first step in our data story. This part of the solution can be used to start the data gathering process or register the analysis that you have already executed internally for Pillar 2. As mentioned in the answers in poll 1, we noticed that there are a lot of people already aligning finance and tax, so it might already be an analysis of the data points internally, so you can register that in this overview. And the outcome of this analysis will be that it shows what information is currently missing in your organization. It allows you to analyze the information available, see what information requires a bigger level of detail, perhaps improvement of data quality or further investigation. But it also allows you to engage all the data providers from the different teams, also the teams that not per se see the urgency of Pillar 2. So basically already prepare for the actual rollout within the organization. So how does this overview work? As you can see on the left-hand side, this overview is broken down into various subjects, and every subject contains applicable data points. So for example, if we look at the adjusted cover taxes, you will see quite a lot of data points that can help you in the process of calculating the adjusted cover taxes. The way this analysis is set up is that you can that it basically allows you to select whether a data point is applicable. It allows you to select who is responsible for a specific data point, whether it comes from a system, fully or partially, from what system it entails, but also whether it has a dedicated GL account or data file. Furthermore, you can add comments and upload supporting documentation to support the analysis of this data, of these data points. And as mentioned before, it's important. An important challenge of Pillar 2 is around the in-depth knowledge on these data points. So to give some guidance and not keep it a black box, we've added more information per data point in this part of the solution. By clicking on the information panel on the right-hand side, it opens up an overview with all the related data points and guidance on those data points. Furthermore, once the gap analysis is completed, you can export this analysis to PDF by clicking on the button on the right top corner. So again, this gap analysis contains a lot of data points for you to use internally and to start that first step in your data story and to see where your gaps are, but especially also already connect all the teams involved. So we have finished the gap analysis, and once we click home, sorry,
Don't forget to save.
don't forget to save. Thank you, Petter. That's the technical part. So we finished the gap analysis. We click on home, we go back here, and we finished that gap analysis. We've executed follow-up actions, and we have the involved teams aligned. Now it's time to execute the first testing, or the rollout of the first testing or the first calculations. So we're going to take a look at the entity level. So again, what we do is we open up the dialog, and the first thing that you can see on the left-hand side is the different colored icons in front of the entity forms. This is used for status management. Through workflow and certifications, the status of a form can be changed, but also important, the data entry can be logged. As you can see, quite a lot of forms have not been started yet. A couple of them are in progress and some are completed. So now let's deep dive into one of the entities, and we'll pick the French entity today. And when we click go, the schedule related to this entity is opening up. The entity pack allows you to gather the information on an entity level to compile the global income, the covered taxes, and the substance-based income exclusion to eventually calculate the implications on an entity level. On the left-hand side, you can navigate to the various schedules that we have created. So, for example, the global income or loss position that allows you to determine the global or income loss, including all adjustments. The covered taxes that allow you to determine the covered taxes per constituent entity, including all adjustments. The substance-based income exclusion overview to calculate the income exclusion, which is required to calculate the excess profit. And finally, it all rolls up into this general information overview, which indicates the potential challenges on an entity level. All the information that you see in this overview is built up from these various schedules. And as mentioned by Petter in the technical introduction, important feature of this level of data gathering lies within the data points that can be mapped from your finance cube to the first column. So the yellow column that you see here, or for some people green, but for me it's yellow. So next to the automated data, the data provider can enrich the data, the information by filling in data in the additions and reductions column. And completed data can be supported by adding documentation and comments in the last column. So that is to support your data story along the way, and also when there arise questions. Furthermore, every data point comes along with additional guidance extracted from the OECD regulations. So again, by pressing the information button on the right top corner, additional guidance is shown on the various data points. And finally, you can draw up reports per schedule to show you what you've completed in this overview. So it's creating a document that you can then use to provide the global income or loss position of this entity. And when the data provider has finished the recording of information for this specific entity, all the implications are registered based on the information provided. You can, through certification, where we acknowledge the information that we have completed and assure that we agree with the information flowing through, we can set the status to completed. So we finish this pack, we complete the workflow, so it recognizes that we're done, and we answer some specific questions on whether we confirm the data correctness or confirm the data completeness. And this can obviously be expanded with any of questions that you would like. And then when we go back into the overview and we click on the interface again, you see that this form is completed. So now we have completed another step in our data story. As we know, the Pillar 2 reporting needs to be done on a jurisdictional level. So the next step in our process is rolling up these entities into a jurisdictional report. So if we go back to our environment and we go back into our hierarchy, instead of selecting one entity, we're going to select the jurisdiction. So please keep in mind that this is the reporting entity for this jurisdiction. We press the go button and it opens up the report. So again, on the left-hand side, you see the various reports that we've set up for this level of reporting, so for this jurisdiction. And first of all, we have the extended overview of the entities, which basically roll up into the jurisdiction information. And has the purpose to show what the total position per jurisdiction is, combined with a more in-depth overview of the entities involved. So all the data points completed at the lowest level are rolled up into this overview. In this case, we see the overview of the total jurisdiction in the case of France. And this overview shows all the variables completed per entity and how it rolls up into jurisdictional totals, but also what it means for the overall effective tax rate. When we have reviewed the entity-specific information, we can also take a look at the jurisdictional top-up tax overview. In this overview, you can select whether a safe harbor is applicable, activate the QDMTT approach, which basically allows you to apply any qualified domestic minimum top-up tax that's creditable against the top-up tax determined under IIR and UTPR. And you can see how the jurisdictional top-up tax is calculated on a step-by-step basis, and eventually show you how it's allocated to the various entities. And if you would like to go to the entity-specific form, you can click on the top right corner and drill down to the various entities by using the drop-down menu that appears. For example, if we select the entity we just went in, and we click on one of the schedules, it will show you the entity-specific information that we just touched upon. Overall, this third step in the data story gives you a clear indication and overview of the entities and the potential Pillar 2 risks in the specific jurisdiction. So now we've finished our review calculated the top-up tax and allocated the tax to the various entities. And now we can move to the final step in our data story, which is the group roll-up. So the final step in the data story is the roll-up into the total company overview. And this overview can be used for the various internal and external stakeholders to see what the Pillar 2 implications are for the whole group. Furthermore, it can be used for future strategy and continuous monitoring. So for the last time, we go back into our dashboard, and in this case, select the global review entity. So we're selecting the dialog again, we're selecting the global review, and we click on the go button again. The report appearing on screen has two report overviews included. So again, we have the extended entity overview. This is an overview that shows basically all the entities within the group rolled up into jurisdictions and combine it with all the variables completed at the lowest level. So again, per jurisdiction, we can see all the information that has been completed. It shows the effective tax rate per jurisdiction and entity, and finally rolls up into a total group column. And we have the jurisdictional top-up tax allocation overview. Just like the jurisdiction report, there is a high over overview of the top-up tax allocation per entity per jurisdiction. And to top it all up, we can generate a specific journal entry in the system to record the top-up tax to the right entities by clicking the right top corner. So conclusion on this is we went all the way up into the group reporting, and you can drill down all the way back to the entity-specific information. So if we now go back to our data story, then we've executed the analysis of the availability of data within your company. This is combined with supporting documentation, further actions, and ignites engagement from the internal and external teams involved. And again, the gap analysis will not be the golden solution that provides you all that information. No, it will help you analyze where your gaps are and where you need to take action. From there, we executed the calculation process by completing entity-specific forms. These forms have been rolled up into jurisdictional reports, which calculate the potential top-up tax and executes the allocation. And finally, we've shown a total overview of the company and the possibility to convert the information into a journal entry. All the different phases were combined with an audit trail, supporting documentation, and obviously guidance on the various data points and status tracking, because not for everyone it is clear what every data point entails. To get back to the situation that additional questions are raised by the authorities, by using this process, we can drill back to the lowest level of detail and basically back up our answers with applicable conversations, documentation, notes, and basically all the data points gathered during this process. So this concludes our live demonstration. Back to you, Martijn.
Thank you, Tim, Petter. Good explanation about Pillar 2 and how we developed a solution for our customers at the moment. Let's go to some questions. Now, please put your questions in the Q&A box at the bottom of your screen if you did not do that already. Let me see the big one. Yeah, the first one. Could you elaborate a bit more on the tax reporting side of your solution? Because it's not shown, but can you tell a little bit more on that?
Yeah, of course. As mentioned, we're gonna have an additional webinar on the global tax reporting solution.
Yep.
But basically, to give you an idea, it's based on our experience as tax interim managers at various multinationals. And there we noticed that a lot of tax reporting solutions were either a black box or US GAAP driven and required quite some amendments to use it for IFRS as well. And the solution that we've created understands that in-depth tax reporting knowledge is not always available in the countries. So that's why we've created a solution that will ask the user for information that's known, for example, gross amounts, local currency, and country-specific tax rates. And then our solution automatically calculates the tax-related implications and automatically creates and reconciles, for example, an effective tax rate, creates a deferred tax overview, change of tax implications, a total tax position, and much more. Furthermore, it creates over 2,000 data points on the back end that can be used for any type of output report or reused for other purposes, for example, shareholder reports, cash tax forecasting, loss forecasting, but also to feed into your tax disclosure notes. And of course, and that's the important part why we're here, to reuse that data for Pillar 2. So yeah, really a proven solution that can help you shave off some days in that high peak pressure time of tax reporting closes.
Okay, thank you. Some more to come. That's the whole message. Yeah. Next one. How does the solution compares with other solutions like a Workiva? So they have both solutions. Which solution makes sense to implement Pillar 2?
Yeah, great question. And I think that especially in these times where a lot of ERP, EPM systems are changed, where finance and tax are looking more at each other to combine the integration and automation, I think that important in this case is to take a look at what platform does what. I would recommend to use OneStream to gather this information, to compile it into usable information and reports that you can then use in other platforms. So, for example, if you're looking for filing, you can use an Orbitex platform to file in every jurisdiction the outcome report from our solution on OneStream. If you are looking to incorporate it with the creation of documentation, then you can connect the OneStream text solution to for example, Workiva, who's really strong with the data to document part. So we really see that OneStream can be the the connector that that gathers all that data, combines it with the finance cube data that's already there, and compile it into something that you can use in other solutions and basically use it for what it's designed for.
Great, thank you. Next one, have you found that the solution requires bringing users into OneStream who might not currently be users? So you become from close and consolidation, for instance. Are there users added to the platform because of this solution?
Yes, definitely. Because this is as mentioned during the presentation, this is a multidisciplinary data gathering story. There are a lot of other people to be involved, especially on the, let's say, on the tech side. Every country has controllers that are responsible for specific text processes. These are the people that you would also involve to fill in information on the entity packs, but also people from legal, people from HR when it comes to specific expenses or to employment numbers. So all these additional departments that need to be involved require people to be active on the OneStream platform as well.
Okay. Another question related to that is, can you leverage the hierarchy in OneStream from the financial queue also for your Pillar 2 solution? Better.
Yeah, that would be a good question for me. Indeed, yes, we can leverage the hierarchy from the financial cube. As mentioned earlier, we reuse the entity hierarchy from the financial setup, and in that dimension, we would create an alternative rollup to for the data to go into the correct jurisdictions. But the entities themselves are reused.
Yeah, that's the nice one of having a unified platform. Eh?
Yeah.
Does the tool also have a Pillar 2 filing function to tax authorities within XML, for instance?
No, it does not. The OneStream platform doesn't accommodate for that, but what we typically see in this process is that we create an output report that is fully aligned with let's say other platforms that can file or filing mechanisms, or that it will be easily to convert to XML for you to file in the various countries. Because one thing that you also have to keep in mind, filing in different countries might be different per country. So although it will be in XML format, still there are different countries that have different filing mechanisms. If we look for example for the Netherlands, in the Netherlands you have to have like a specific certificate that allows you to access the let's say the data stream towards the Dutch tax authorities. So you need to have that certificate in place, and that's also for other countries. You need to take action on specific filing mechanisms before you can file that. So what we do is try to make sure that the output of this whole process from OneStream at least is aligned with what you can file in those countries.
Okay, thank you. Another one maybe for you, Petter. The question is my understanding correct that master data is stored in a global section, or does the Pillar 2 solution has a separate master data section?
So in this case, we create separate dimensions for the Pillar 2 solution, all of them, as I said before, apart from entity. We do use user-defined dimensions as well, and those are tailored specifically to Pillar 2. And that way we also use a separate queue and ensure that the data is stored separately and has no direct effect on the finance setup or any other setups within the OneStream platform.
Okay, cool. Related to that, maybe there's a long question. Let me shorten it a little bit about the global income. Are you able to leverage already from your financial data, so close and consolidation, to use that in the Pillar 2 solution?
Yeah, the solution right now enables us to map data from the finance setup to the Pillar 2 setup, so that the data is copied automatically, and then it can be expanded upon for tax purposes.
Okay. Cool. Tim, if a headquarters is located in the US, are they impacted by Pillar 2?
Well, the US is currently looking at their guilty approach, how to incorporate the Pillar 2 implications. So that we're waiting for that transition, but currently the US is not one of the well, let's say countries that has adhere to the Pillar 2 regulations as mentioned by the OECD, but they are looking at their guilty approach.
Okay. And also related then to the deferred tax, does your solution contain a calculation or specification of the components of Pillar 2? And then deferred tax related in this case is the question. And then per company and jurisdiction by.
Yeah, so that's a really important one, and that's also why we see that there's a great integration with the tax reporting solution. So our tax reporting solution has a tax-based balance sheet incorporated in it, a loss overview as well, and the deferred tax overview in the tax reporting solution calculates the deferred tax on a line-by-line basis. So all the implications on change of tax, on let's say the losses, the utilization of losses, expiry of losses, the uncertain tax positions, and the effects of that as well are taken into account in the tax reporting solution, and therefore we can leverage into the Pillar 2 data points.
Yeah. Okay. Thank you. I scrolled through all the questions so far. Maybe I missed one or two, but we will follow up by email on that one. So with this, I would like to close this webinar. Thank you for joining. And now we also have a replay available. We will share that, of course. That was also one small question. And we will share that after this webinar. If you have any questions afterwards, or you would like to have a specific detailed demo, please reach out to us. You can send an email to sales@amco.one, and we'll pick it up for you and make sure that this follow-up is planned forward. Thank you very much, and hope to see you soon again.
Thank you very much. Bye-bye.
Thank you.